Okay, it is officially 1 minute after the hour, and that means it's time to get started. Thank you all so much for being here. This is our February edition of the Department of Agricultural, Environmental, and Development Economics at The Ohio State University's spring webinar series, which is titled the Economic Outlook and Policy Webinar Series. And today I have the distinct pleasure of introducing my colleague, Dr. Sing-Kee Lee, who is an assistant professor in our department, and he's an assistant professor of agricultural economics and farm management. And today he will be sharing with us some key international issues that are on the horizon for grain marketing in 2024. So just as a few housekeeping notes before we turn things over to Dr. Lee, how this will work is that Dr. Lee will present for approximately 50 minutes, leaving 10 minutes at the end for any outstanding questions. And so if you have questions, feel free to put them in the Q&A or put them in the chat. I will be moderating that, and we'll have those spread off into the end. And if you are all going to be muted and camera off, just as we're running this in a webinar format. And so if there are any questions about access or you're having trouble hearing or seeing the slides, feel free to put that in chat and I'll keep an eye on that as well. So without further ado, I am going to turn things over to Dr. Lee for our webinar. And thank you all again for being here.
Thanks a lot, Margaret. Thanks for the nice introduction. So hi, everybody. Thanks for joining. It's always really fun to have this webinar. So today I'm going to talk about basically the big theme is, of course, grain marketing. You know me, but the subtitle is what are the key international issues? So let's begin. So before we start looking at the market outlook and international issues, I want to share a brief update of 2022 census numbers of Ohio agriculture as we got the new census report last week. For your information, census is conducted by USDA every 5 years, and this is the most comprehensive survey showing today's landscape of U.S. agriculture. So first, when we look at the number of farms in Ohio, there has been a slight decrease, about 2.3% down. Here we go. Down during the past 5 years. So compared to 2017, now it's 2.3% down. In 2022, Ohio is reported to have 76,008 farm operations, which means about like 1,800 or 1,800 farms disappeared during the 5-year period. The major drop was found in 1 to 2 acre size, small size farms, and 100, when you look at this pink, so 180 to 499 kind of mid-sized farms. Those are kind of the major groups that showed the biggest drop. Notably, the largest size farms with above 2,000 acres were found to be increased from 781 to 928. So compared to 1997 or like 2002, the Ohio agriculture is obviously more polarized towards the small-sized farms and above 1,000-acre large-sized farms. So that's kind of a quick update of the number of farms in Ohio. Looking a little more about the census numbers here, like total Ohio farm revenues and expenses are plotted. The red line is total farm expense, and the blue line is the total revenues. Since it have been crazy 5 years, including trade war, COVID, perfect storm, war in Ukraine, and so forth and so forth. So there are so many factors that affected the trend. However, clearly we see uptick in total expense and revenues here, mainly because of the COVID rebound. When you look at the gap between the blue line and red line here, which indicates the net gain of Ohio farms, 2022 was obviously a good year compared to our historical levels. Of course, we have to take this with a grain of salt because it is not adjusted with inflation effect. But anyway, the gray bar, the average revenue per farm corresponds to the right y-axis. It also shows significant improvement in 2022. But we should note, again, these numbers are nominal, so the inflation is a hidden piece that we have to take into account. So to understand the effective inflation, or at least to get a better sense of the real changes, I want to share the production expenses in 2022. The gray bar corresponds to the left y-axis here, and this is indicating item-specific total expense. To display cumulative total of the major 7 farm inputs, I align the bar charts in a stepwise increasing format. So when you look at the chemicals here, we can read the $6.77 billion as the total expense of the 7 items or 7 inputs. And the red line here is corresponding to the right y-axis, and this indicates the per farm expenses. Feed, fertilizer, and livestock poultry purchases were the top 3 expenses. So feed, fertilizer, livestock, poultry. More importantly, compared to 2017, there have been substantial input cost increases. For example, fertilizer expense became 66% larger than 5 years ago. So the key takeaway of the new census is the increasing profitability, the increasing probability of margin squeeze based on the historical pattern. Input costs tend to be stickier than commodity prices. So many firms are likely to see the still high input expenses while their sales price is declining. So risk management will be crucial for the next few years. Now, this is the main contents, the table of contents. The figure shows the cash price in the Toledo region. This is, I think, the typical graph nowadays I am sharing. So the corn price is plotted in black line with the left y-axis, and the soybean cash price is plotted in red with the right y-axis. Compared to November, when we had an outlook and policy conference, there have been some price fluctuations. For soybeans, the price has gone down, but not a big difference from November. But the corn price has additionally decreased quite a bit during the past few weeks. Now the corn price is at around $4 per bushel, which is pretty close to the 2019 level. So weak corn is the key feature of the current market nowadays. And in the following, I'm going to share the outlook updates based on the February WASDE report. So it's kind of, we first have to understand what's the prospect of the grain marketing. Then probably I'm going to talk about the export updates. Lastly, I will change gears and talk about several international issues, which is the main theme of today's talk. So first, let's check some production numbers. The figure shows the 2023 state level yield rates, which can be regarded as finer numbers, arguably. For corn, we had a record yield and record production last year, which became the most dominating factor in the current market. So many states are colored in blue, indicating they had a yield increase. For instance, Ohio had 198 bushels per acre on average last year, which is a record level and 5.9% higher than 2022. In the case of soybean, overall, the national yield has gone up by 2%. As shown in the map, many states had an increased yield, including Ohio, that had a record level yield. However, because of the lower planted areas, the 2023 soybean production itself was actually smaller than 2022, which is protecting soybean price fundamentals nowadays. And to check the details of the market outlook, let's see the corn balance sheet. So compared to January WASDE report, USDA has not changed much. No change in supply numbers, as you can see in this column. So here, and resulting in the total supply estimate as just 16.7 billion bushels, which is about 1.7 billion bushels larger than 2022. On the demand side, where the items are in gray rows here, we don't see a big difference from January numbers. USDA only ratcheted down the food demand by 10 million bushels. This small but bearish adjustment raised the ending stock by 10 million bushels, as you can see here. Of course, the demand numbers are not cut and dried yet. So for the rest of the market year through August, the market will swing based on the changes in demand estimates. And on the right side, I put a couple of useful indexes. The most important value will be the stocks to use ratio. Basically, the stocks to use ratio is percentage or the ratio of the ending stock to the total use. So kind of here the ending stock is divided by the total use, then we can get actually about 15%. And this is kind of indicating the excess supply of the current market or net supply. So as you can see, it has gone up from about 10% to 15% when you compare the 2 years. And obviously, that is really like driving the market bearish. And of course, maybe down the road, the export and ethanol use, those kind of demand factors will be kind of key signal or key index to read the market, because if we can get a good consumption and quickly consume the high stock level, then probably the market will be back to the historical average, or at least kind of normally operating. But otherwise, we should be worried about the high stock level, because then it can actually even affect next market year as well. This is actually a little bit of summary for the quarterly grain stock report that we had last month. Corn stock was estimated like 13% larger than last year. Actually, on the farm and off-farm storage all like went up pretty much. And soybean stocks went down by 1%. Wheat stock went up by 8%. So that is kind of the quick stock level summary. We are gonna get a new number in March, so probably in April, but based on March survey. So the reason I'm sharing here is actually when we plot the historical observations between the stocks to use ratio and the season average price of corn, you can see obviously some negative relationship between the stocks to use ratio and price. And as I mentioned before, if you think stocks to use ratio as an excess supply or net supply, then probably that surplus level is kind of should be negatively affecting the price, because then probably corn is abundant in the market, so it is pretty much discounted. And another interesting point here is when you think of these two groups, like put the threshold 10%, and whenever the plots or scatters below 10% stocks to use ratio, we can see prices were relatively like staying high. But whenever stocks to use ratio goes above 10%, the corn price was relatively low. And obviously that pattern still like affects the market. So in 2022-23 market, we had 9.9% stocks to use ratio with $6.5 per bushel. And this year we got about, actually based on this report, we got 14.8% of stocks to use ratio with $4.8 per bushel. So obviously this stock level will be the key information when we are understanding the corn fundamentals and actually soybean fundamentals as well. Here is the soybean balance sheets, and obviously we are kind of having a similar situation as corn. We don't have any update in from USDA compared to the January report. So overall, the production numbers has not changed. The total supply is still like 4.46 billion bushels approximately, which is about 110 million bushels lower than last year. So obviously this is kind of the key factor protecting the soybean fundamentals nowadays. When you look at the gray area, the demand side, not much change, but export actually has been ratcheted down by 35 million bushels, and that actually affected in a bearish way the price as well. So finally, USDA also adjusted down the season average price by 10 cents. So now the season average price is projected at 12.65 dollars per bushel, so which is about 1.55 lower than last year. And I have a similar uh, back of envelope calculation numbers. So the stocks use ratio, when you look at it, it's actually much better than corn. So still it's much below 10%. And as you can see, like last year we had 6.1% stocks use ratio. Now we have 7.6%. So like higher than, but not like drastically higher. Like when you think of corn, it was actually about 50% increase in stocks to use ratio, but now we are not actually having that much high increase in the case of soybean. So obviously, tight ending stock supports the soybean fundamentals nowadays, but of course, export prospect is a little gloomy nowadays. Here's additional evidence showing the season average price and stock level like relationship for the soybean in this case. So when you look at the historical pattern, the ending stock, and obviously you can also see the ending stock and price level are having a negative relationship or inverse relationship. So still soybean stock is relatively low now, making the season average price at 12.65. More importantly, I think we are seeing some strong domestic soybean demand. So that is kind of a silver lining nowadays. This is the recent soybean crush trend. It is pretty self-explanatory. So as shown in the red line, the 2023-24 market year shows an outstanding progress in soybean crush. In fact, 8 out of last 10 months, we had the monthly record level soybean crushing. We expect to see very big soybean crush this year, along with the increasing demand for soybean oil. So, and this is actually the soybean oil 5-year summary documented by USDA WASDE report. So we can see the biofuel use from soybean oil has increased from 8.9 billion pounds to 14 billion pounds for the past 5 years. By contrast, the soybean oil export has dropped quite a bit as the increasing rate of biofuel was dominantly large. The soybean oil ending stock were relatively low, as you can see here, especially for the past 3 years. And probably like giving you a little bit of the information about this, like why biofuel is kind of so like much like promising nowadays. Obviously, that is because of the renewable diesel, and probably you have heard of this news or not, but in fact, in California, one of the largest fuel markets in the U.S., renewable diesel sale exceeded petroleum-based diesel in the first quarter of 2023. So, although not renewable diesel is made from not all renewable diesel is made from soybean oil, but the expansion of renewable diesel using soybean oil and its relevant policy support will be a game changer, maybe for the next 5 years. Currently, only 3 Western states are running the low carbon fuel standard, incentivizing the renewable fuel. But there are more than 10 states considering a similar legislation, so this will be a good checkpoint. Now, let's move on to the exports. So I'm kind of moving on to a little more international issues. So this is corn export progress. In the left figure, you can see the aggregate corn export made through the 22nd week of the market year so far. So far, we made a pretty good headway. As you can see in the left figure, the red line is indicating the current year's progress, and it is pretty close to the dashed line, which is the 5-year average. pace. So the final number that USDA projected looks like pretty reasonable. It's 2.1 billion bushels. And the right figure indicate the top 6 U.S. corn purchasing countries as of the 22nd week of the market year. Specifically, the gray bar corresponds to the left y-axis and means the volume shift compared to the same week of last year. For instance, Mexico has purchased about 150 million bushels more than last year, which is about 31.9% increase. And the blue dot, this is actually corresponding to the right y-axis and indicating the total volume that the country has purchased from US so far from last September. So for instance, Mexico has purchased about, I think it's a little bit hard to read, but about a little above 600 million bushels, I would say. So since US corn is pretty much discounted nowadays because we had large supply, most countries purchased more than last year, except for China. Probably I'm going to talk about that more. So within the corn export, China turns out to have picked up quite a bit of old crop corn, but not new crop corn, as you can see here. Only 5% of new crop corn exports were taken by China. This signals that China is not very interested in the new crop corn from US and will not likely make additional big purchases for the rest of the market year. I'm pretty pessimistic. Several factors actually explain this. Putting aside the geopolitical factors, first and foremost, China had a good harvest like the US. Second, their domestic economy is still struggling, so cannot see a strong feed demand over the horizon. Third, they already purchased a large amount of corn and soybean from Brazil, and as Brazil had a record production last year. Lastly, there is a transportation issue that worsened the situation. All this affected the low purchases from China. By contrast, Mexico had weather issue and their short supply led to a considerable purchase of US corn. This is the world corn production summary. As you can see, the world corn actually had about 76.6 million tons increase in terms of the total production, which is about 7% increase. And obviously, the main contributor is the United States. But also when you look at the China, it had got a pretty large amount of additional crop this year, which is kind of actually preventing them from purchasing more US US corn this year. And the other thing I want to highlight here is the Argentina. As you can see, we are anticipating, this is not set in stone yet, but we are anticipating Argentina production will be much larger this year because when you look at this 35 million tons, that is actually about 60% of their historical average. So it's actually, they are kind of getting back to their historical average. This is the schedule of Argentina crop. So their corn harvest will be mid-March through June. So probably we will see a little more precise numbers for next month or 2 months. So that's kind of what I'm seeing now. And maybe they are going to have also soybean production, which will be shaking the market as well. Here is the soybean export update. As of the 22nd week of the 2023-24 market here, we are seeing an unusually sluggish export, clearly below the 5-year average trend. USDA anticipates pretty low total export this year, which is about 1.7 billion bushels. And when you look at the right figure with the same structure as you have seen in corn, it's pretty easy to tell that the main culprit of the slow export progress was China, especially China's low purchase. So, and the reason I mentioned earlier for corn is actually still applies to this as well. So they had not a bad production, but also their domestic economy issue, and also they purchased a lot from Latin American countries, and also finally there was some transportation issues that I'm gonna talk about later. So here the soybean export um, for corn, old crop and new crop. So still China takes the majority of soybean purchase even for the new crop. Why? Because probably like at least like it was not like their production or their harvest for soybean was not uh like that much like dominantly larger than like soybean. So it was still like my gut feeling is they still need more because Chinese soybean production was not like not at least not as good as corn they had last year. So you can see here. And when I actually, as I mentioned here, China had a little bit of increase in its soybean production, but it is not like that much substantial as we saw in corn. So obviously they will have some room for like additional demand. So probably China will still like import quite a bit of US soybean, but at the same time, it looks like they are waiting for the Latin American harvest because then probably they will not need to import more US crops. So that's kind of why we have to pay attention to South American production. About 5% increase of global soybean production is anticipated, which is about 20.2 million tons. And although it had and I mentioned already China, and also like the main I think thing that nowadays the kind of concerning is probably the Argentina production, as I mentioned before. So like corn, soybean, they also had pretty low production last year, and this year, if they just come back to their historical average, it's gonna be just double supply. So this large supply or additionally large supply will be affecting our export progress, and eventually will be affecting our soybean balance as well. And probably this graph will well illustrates the potential impact of Argentina production. So the global soybean stock is estimated at about 12.7 million tons larger than last year. And when you look at the green bar, the Argentina is an outstanding contributor to this increase. So obviously, like compared to December forecast, this is the January forecast, but you can see obviously it is kind of going up, and mainly because of the increase in the Argentina production or Argentina stock level increase. Now, finally, let's move on to the international issues. So I'm gonna I prepared a couple of issues. So first, of course, the most obviously important thing and will have a direct impact on the market will be the South American production. So I'm going to talk about that first, and then I will move on to the Mexico's ban on GM white corn. And then also I'm going to talk a little bit about the transportation issue and Ukraine production export situation. And finally, some other wild cards that might be affecting the market for the next couple of months or years. So probably like this is for basically the export prospect, but South American soybean production has become inextricable to read our export prospect. So this is the soybean production projection and past history. When you look when looking at the gray area here, Argentina production, it was remarkably small last year, and then the soybean supply from so and then it's still like it's not like set in stone again, but we are expecting at least they're gonna have as normal production as they had before. So basically, this will make a large increase in Latin American production, and this projection results from like both continuous increase in Brazilian production and Argentina's like production recovery. So those kind of two factors are mainly contributing to the to the increased soybean supply from South America. Now, let's check the Brazil's production. So as shown in the left map, the Brazil egg production is concentrated in West Central region, including Mato Grosso and southern region. And in the right crop calendar, we can see, or we can have some sense of what stage Brazil crops are now. So, the first crop, corn, is at the beginning of the harvest. Let me click a little more. So yeah, now we are in the February. So the first crop, corn, is at the beginning of the harvest, and the second crop, corn, the major corn of Brazil, is almost done with planting, and soybean harvest will start next month. So basically, this is pretty critical timing, and the weather condition might be crucial for the final production numbers. So as the Mato Grosso is the primary region for crops, I want to quickly check how the weather there. When you see the red line, it's getting more and more divergent from the average precipitation. So the drought risk is escalating, obviously. Last year is a good benchmark when Brazil had a record production. So probably if they can quickly recover the precipitation level down the road, then probably their production level will be pretty high. But otherwise, Brazil production can be much lower than what we expect now. And finally, then the outlook will also change a lot, and U.S. farmers marketing plan also should be adjusted according to that. This is the extreme max temperature pattern in Mato Grosso. Not crazy volatile, but clearly they are having more frequent extremely hot days this year than last year. So again, we can tell the weather risk will be a key variable when it comes to a wild card from Brazil. This is about the inside scoop. So I kind of collected the data from the Brazilian company Conab. They usually follow what USDA does. So they kind of do the monthly survey and update their production estimates. So, and this is their February number. The yellow bar is actually indicating the total production corresponding to the left y-axis. And the green bar is indicating the soybean total production, also corresponding to the left y-axis. And these two lines are indicating the corn and soybean percentage change of production compared to the previous year. So for instance, here, the Brazil soybean production is expected to be 3% lower than last year, and Brazilian corn is expected to be 14% lower than last year, mainly because of their last year production was so good. And when you look at the level of production, actually, it's still high. When you look at their historical production levels, this year projection is still relatively high. So Brazil production is still pretty sizable and will be a dominating factor. But what they are actually anticipating, at least in terms of these number, they are a little more pessimistic than USDA. So actually many experts are thinking USDA will eventually adjust down the Brazil production a little more for the next couple of months. So depending on how this number will go will be, I think, the key factor of our export progress and the global grain flow as well. And to sum up, currently Argentina is having a relatively favorable growing season. Brazil reports some weather challenges in southern region, but the production numbers have not been drastically adjusted yet. Given the current heat and dry weather in Mato Grosso, the west central region in Brazil, so if that continues, USDA will likely make some adjustment in Brazil production. So that's something we have to keep an eye on it. So the next international issue is the Mexico's ban on GM white corn. As we can see in the timeline, this ongoing issue has been actually around for more than 3 years. And finally, this January, the initial ban is set to take effect. So considering the large portion that Mexico takes in our grain export, this issue should worth paying attention. Currently, the ban is all about white GM corn. So here, GM is genetically modified corn. So in the most extreme, if yellow corn is also included, which I don't think very likely, we will need around roughly 650 million bushels of non-GM corn to meet the demand from Mexico. U.S. white corn exports to Mexico are actually not very sizable. And when you look at the data, actually it is declining because of the GM white corn ban. But probably like we can learn something from the history. So this is the historical corn export pattern to Mexico. Particularly the blue line here that corresponds to the right y-axis shows the portion of white corn within the U.S. corn export to Mexico. First look, we can tell it is relatively small, below 5%. So probably the short-term shock of this dispute probably will not be large. The major exporting states can possibly see perceivable changes in export shifts, such as an increase in non-GM white corn export and a decrease in GM white corn, but probably will not be like really like destroy the market, I think, because anyway, GM white corn is not really taking a huge portion. But of course, who knows if the dispute goes worse, get worsened, and if the tension between the two countries goes aggressive, then probably we will see additional tariffs, and that's gonna be actually affecting the grain flow as well. What about Ohio? This is a historical trend of Ohio corn export value to foreign countries. The red bars indicate Mexico, and as you can see, they are pretty tiny. So Ohio is not likely to receive a direct impact from this issue, at least based on the data. However, the data does not capture the grain flow from Ohio to, excuse me, to Mexico that was stored in the middle in other states. So if we think of some like crops or white corn like shipped from Ohio to maybe in Louisiana and then stored there, and then finally exported to Mexico, then this data is not really counting it as the Ohio crop, but just Louisiana crop. So that is kind of the pitfall of the data set. So probably there must be some indirect impact, and that indirect impact can be actually larger than what we can read from this figure and from this data. So although this ban itself is bad news, but non-GM white corn growers can receive some windfall benefits. But also at the same time, I don't think the windfall benefit will continue for several years. Remember, the main reason for Mexico's remarkable purchase this year was mainly due to their production issue. Also, Mexico is actually known to have self-sufficient white corn production capacity in a normal year. So we should be cautious of too much optimism for that angle. The next international issue is the sea transportation. Specifically, I want to talk about Suez Canal and Panama Canal. So after the Houthis attack on commercial ships in Red Sea last November, some vessels began opting to avoid the Bab el-Mandeb choke point here. So like longer routes put upward pressure on freight rates because of fuel cost and fuel available ships. So maybe vessels that do not pass through the Suez Canal via Bab el-Mandeb Strait and Red Sea can go around the Southern Africa via the Cape of Good Hope, but that route can actually add significant time to the voyage, depending on the ship's origin and its destination. For instance, a very large gas carrier consumes about $30,000 to $35,000 worth of fuel per day. In addition to adding to fuel costs, a longer voyage requires more ships to maintain the same delivery schedule, and fewer available ships contribute to higher tanker rates and cost. And in fact, the shock on the shipping has gone up considerably, as you can see in the graph. So overall, the clean tanker rates become over 60% higher than before this issue. So when you just compare here, like maybe kind of in November, like tanker rates to the current tanker rates, it's above 60% higher. So that is one thing that obviously not directly affecting the grain flow, but pretty much affecting the international transportation and eventually like affecting our export performance as well. Probably a little more direct impact on our like grain export performance will be the Panama Canal. So Panama region is actually having historical droughts nowadays, and this is kind of actually one of the main effects that affects our grain transportation. Why? Because when we are actually doing the grain exports, we move our grain to the Gulf Coast, and then we use this Panama Canal to ship our grain to the Eastern Asia countries like China, Japan, South Korea, Philippines. But Panama Canal actually has very interesting operation system. It relies on surface water like river and rainfall. So it is heavily dependent on their like water availability. As you can see in this animation, whenever the ship is moving through this canal, they need water. And if water is short, then obviously the charge will be higher. So this is actually kind of a figure generated by McKinsey and Company. So the freight increase tends to hit harder on dry bulk commodity such as corn and soybeans. So like if you think the initial level of freight was 100, then relatively dry bulk is likely to see about 14% higher cost. And some other goods relying on this canal is not actually experiencing that much increasing rates. Okay, so why? Because bulk shipping usually does not have to pay extra fee to get the priority when transversing the canal. So the price was reasonable before, but now the extra fee is put on all types of ships, making the canal cost prohibitive to bulk ships. So that's why we are seeing, especially the dry bulk is experiencing relatively high increase of the shipping rates when using the Panama Canal. And here the left figure is about corn export inspection rate between regions. The US Gulf, which is colored in red, has a lower portion this year than last year. In fact, 54% for Gulf is the lowest level for the past 5 years. In the right figure, I want to highlight the purple bar here, the sales and shipments toward China. When we were in the COVID rebound during 2021 and 22, the sale to China was above 20% of total corn export sales. But this year, this is of course as of week 17, but you can see the portion of China sale is very much tiny. Again, I'm not saying logistics is the only reason, but in addition to global competition, China's large corn harvest, Panama Canal is clearly deteriorates this situation. And this is a very short update on Ukraine production and export. As we saw before, 2023, Ukraine corn production has increased by 138 million bushels. You have to actually go back to the corn production, global corn production table provided by USDA. But anyway, that was because of good weather last year. However, you can see in the left figure that Ukraine's corn exports were at the lowest for the past 5 years. So mainly because of the war. From the right figure, we can see the portion of grain corridor almost disappeared when you look at this green bar after the termination of the Black Sea grain deal last July. So the Ukraine situation seems pretty gloomy, good production yet harder to sell. That's kind of the very short summary of the situation in Ukraine. And lastly, there are two wild cards that I want to highlight. First, last December, China finally officially approved the use of genetically modified seed use. We learned well about the productivity increase from this biotechnology. If Chinese farmers successfully adopt it, there will be a drastic production increase both in corn and soybeans. So for the next few years, the global grain flow can substantially change because of this move. So that's one thing I want to highlight. And the other wild card is the EU is actually pushing a deforestation-free policy nowadays, which is set to take effect next year. The policy covers major commodities, including soybeans, cattle, and in fact, EU is the primary destination for Brazilian coffee export, second largest destination for Brazilian soybean and oil palm and their derivatives, and the third largest for Brazil cattle and wood and their derivatives, as well as cocoa and rubber. Although Brazil and EU are actively cooperating to facilitate a successful transformation of the Brazilian production system to meet this standard. But the short time window till the deadline raises uncertainty and concern. So there might be a huge shock on Brazilian agribusiness if this policy is just implemented as it is scheduled. I'm not sure whether that is going to give US farmers additional chances to export, but obviously this is kind of some international issues that will affect the global commodity markets. So finally, this is the takeaways of the grain marketing, or at least from my presentation. Corn, a record level production, pretty bearish trend continues. And soybean, relatively strong fundamentals, and export is remarkably sluggish. Stocks presents the supply move effectively. That's what we learned from this presentation. But probably in the worst case scenario, given our very high stock level, it can take more than a year to bring corn stocks back to normal. So then obviously our 2024-25 market year will be affected by the current bearish mood in the corn. Abundant supply supports export performance, but we have seen a couple of transportation challenges, and this issue will not help the export progress for both crops. And obviously, I think although we are having pretty good fundamentals in soybean prospect will be dependent on South American harvest prospect. So that's why we have to keep checking how they are doing. And some bears are coming, probably China's approval of genetically modified variety or seed use. A silver lining, or maybe a little bit of bull I could think of is maybe the renewable diesel support can be a good boost of soybean demand down the road. So that's something I wanted to highlight. So with that, I want to open up for the questions. And thanks for listening.
Great. Thank you so much, Seung-Ki. as we said in the beginning, if you have any questions, feel free to put them into the Q&A or into the chat, whichever one you find more easier to use. We'd be happy to take those questions. Given that we have none at this time, thinking I'll ask you a few that I have sort of bobbing around in my head.
Mhm.
First is more of a sort of clarifying question, I guess, on that new EU certification for deforestation-free products. I'm wondering, is that specifically targeted at Brazil, or is that going to be applied to products from anywhere that
It
that the
applies
EU
to
imports?
anywhere, but obviously I don't know like how they measure the deforestation free. Actually, the time period will be pretty important. If the deforestation is just defining maybe any deforestation happened during the past 5 years, then probably that will affect Brazil only. If the deforestation is defining maybe past like few hundred years, then US will be also under the umbrella. I'm pretty sure that's not the case, but I think one of the reasons that why they are pushing this is kind of one easier way to protect domestic farmers within the EU. Is kind of actually, if we just think as an economist, this is kind of type of tariff through this good like reason of environmental like justice. But also I think, but obviously like Brazil will be uh, the country heavily affected by this policy.
Okay, great. Yeah, and that sort of got at my other question, which was going to be, do you expect there to be other countries other than Brazil that are affected? Like, obviously, we know that U.S. isn't experiencing a lot of deforestation, but there might, it depends, I guess, on how rigorously they define it and how close enforcement is. But that kind of got at what I was going to ask next, is if other countries have to be worried um, as well.
Well, probably I think some other like South American countries will be affected as well, as Brazil is just like having the dominant portion of it, so that's why it just got the spotlight. But I think Argentina, like Paraguay, they will be
Mhm.
affected, and some other maybe like Southeast Asian countries that also they did some deforestation and get some like rubble and some other like commodities they are shipping to EU, that they will be also affected by this rule.
Interesting.
Yeah.
And then, of course, I mean, China, like the GM seed in China, like you said, that could be a huge mover of global demand. Um, how do you know off the top of your head? And I guess it's okay if you don't, but how much of China's grain currently is exported to places like the EU, where they're much more sensitive about GM grain? And do you see there being the biggest impacts there, or is it going to just be like global shocks, kind of that are hard to predict?
Well, look, even though China is one of the largest like corn and soybean producers in the world, still like they are importing pretty much. They are not actually
Mm,
exporting because their domestic demand is so high. They are not still self-sufficient in terms of the production and demand balance. So that's why they are kind of the first strategy to improve their food security was diversify the import channel. So not only relying on US, but also relying on Brazil and other countries. That's the first step. And then as a second step, they now like allow the GM crops. So that's gonna actually raise their domestic production. And eventually then if China is just stepping away, walking away from the global market, then probably we will see pretty much shrinked volume of trade in both in corn and soybean.
cool. Well, maybe not cool is the right word, but that is it's going to be certainly an exciting trend to follow, and it's a very, really, as you said, really big development, and could be a
Yeah.
kind of game changer for the entire market.
Yeah, probably like we are actually experiencing a vaccine because last year, finally, we actually had a significant drop in terms of
Mm,
exports because of the large supply from Brazil and not Argentina, but Brazil mainly. But because of that, we now kind of getting some sense of if there is really like no like, room for exports, how we should plan and make some like progress to improve the domestic demand. So kind of we are also kind of in the learning process how to handle if we really like see very like small room for exports, and yeah, like renewable diesel, like we can see some other like policy supports and probably industry driven changes of additional demand down the road.
Yeah, it's always interesting to see how these things shake out. How if one thing leaves, what fills in the what if anything, hopefully something, but what if anything fills its place. I think that's
Yeah.
a really I think I like that the vaccine analogy is we're sort of taking a small dose of what could come if China
Yeah.
really starts to produce like crazy.
Yeah.
Um, very cool. Well, I don't see any other questions in the chat, and I'm assuming that means that everyone is smiling and satisfied with regards to the current situation in terms of global grain markets. So if someone is, furiously typing a question in the chat, if you could maybe just send a quick message to say that you are, we can get to that. Otherwise, Dr. Lee has left his email here on the slide, and I know he is very, very willing to chat with people via email or have a phone call if there is something that is sort of something that is unanswered or you'd like more clarification on. And so if that is indeed the case, that we are out of questions, I think we are good to call this webinar to a close. Sinki, I'd like to thank you so much. As always, I learned a lot. I think it's always really entertaining. I love your slides are always super informative, and I think you have great information here that you see some feedback from our emeritus colleague, Alan Lyons. Thank you, Alan. He says excellent program. And I have to agree. There will potentially be, those of you who are still here, a survey just to give a little bit of feedback. It's important for us junior faculty to get feedback on our programs. And so if you do receive something via email, we really, as always, appreciate your feedback, and constructive comments are always very, very welcome, and we take them on board and take them very seriously. So without further ado, thank you. I'll do a clap for
Thank
everyone.
you.
And yeah, and we will see you all next month when we have our March webinar, which will feature another one of our fantastic junior colleagues and on a completely different topic. But that's the beauty of the webinar series, is we get to hear from all sorts of different people with different levels of research. So I'm going to officially call this to a close. Thank you all so much, and have a great rest of your week.